As we head into summer 2025, mortgage rates are higher than most people would like. Home prices are still stubbornly high too. Now, President Trump's proposed tariffs could make things even trickier for homebuyers and homeowners looking to refinance.
Now to President Trump indicating a breakthrough at the tariff talks going on in Switzerland this weekend between American and Chinese officials.
80% tariff on China seems right. The current tariff is 145%, so he's floating a 65% reduction in tariffs to China.
A tariff is like a tax the U.S. puts on goods we buy from other countries. Trump's plan includes a 10% tariff on all imports, with even higher rates on goods from places like China. The idea is to encourage companies to make more products in America, which will create jobs and help secure our supply chain. But there's a catch. Tariffs make imported goods more expensive, from clothes to electronics to building materials. When the price of everyday items goes up, that's called inflation. To keep inflation from getting out of control, the Federal Reserve might raise interest rates. Higher interest rates make borrowing money more expensive, not just for credit cards or car loans, but also for mortgages. So if tariffs push prices up, the Fed could respond by hiking rates. That would likely mean higher mortgage rates, which translate to bigger monthly payments for home buyers. For homeowners wanting to refinance to lower their payments, rising rates could close that door, leaving them stuck. Right now, the Fed is holding its key interest rate steady.
Baked into the action on Wall Street today was no change in interest rates. What is changing is the Fed's statement.
If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment.
Trump has pushed for lower rates to boost the economy.
Well, the Bank of England cut, China cut, everybody's cutting but him. If he would lower interest rates like China did, like I think UK did, but like numerous other countries have done, it's like jet fuel, it'd be great.
But the Fed is cautious. They're worried that cutting rates too soon could make inflation worse, especially with tariffs on the horizon. This balancing act is why mortgage rates haven't dropped like some hoped. The bond market, which heavily influences mortgage rates, is already showing signs of movement. The 10-year Treasury yield, a number tied to government borrowing, has climbed recently. Mortgage rates often follow this yield, so if it keeps rising, expect mortgage rates to creep up in the coming months. Home builders are feeling the squeeze too. Tariffs on imported materials like lumber, steel, and concrete raise the cost of constructing homes. When builders pay more, they usually pass those costs on to buyers, driving up home prices. Higher costs also mean fewer homes get built, which keeps the supply of houses low. Low supply plus high demand equals sky-high prices, making it harder for first-time buyers to get into the market. No one can predict exactly how Trump's tariffs will play out, but their effects go way beyond imported goods. They can ripple through the economy, fuel inflation, and hit your wallet. And even if you rent, you could still be impacted. For renters, higher home prices could mean landlords raise rent prices to cover their own rising mortgage payments. So, what can you do? If you're thinking about buying a home or refinancing, it might be wise to act sooner rather than later. Mortgage rates could climb higher, and waiting for them to drop might not pay off. Your best bet is to talk to a wholesale mortgage broker to lock in a rate now or explore options that can save you money. For buyers, consider looking at smaller homes, new construction homes, or up-and-coming neighborhoods to stretch your budget. The bottom line? Tariffs may seem like a distant policy, but they could hit close to home, affecting what you pay for a house and how much you keep in your pocket. Stay informed, plan ahead, and don't sit around waiting for the perfect moment. It might not come.